Good morning. It's time again. It's that time again, ladies and gentlemen. Time for pre-market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com. This is one of those mornings that if you are a subscriber to the Pulse Waves, you are one happy camper. Take a look at these markets. The Dow futures is up 1,700 points, flirting with 30,000. Take a look at the NASDAQ 100. It is up 76 points right now, trading at 12,148 and three quarters. You got the E-mini S&P 500 up 153 points and a quarter, trading at 36.54 and three quarters. Russell, my hustle, up 115 points, which is now standing at lock limit up. The price has been frozen at 1758.1 for, look, it feels like about an hour now, maybe longer. Lock limit. All right, the Dow keeps on going, but the Russell is lock limit up. I have not seen a lock limit move in futures in quite some time. And what I mean by that is futures that I normally trade in. I have not seen a lock limit. As a matter of fact, I'm trying to think now. I've not seen a lock limit in future in the Russell ever. I cannot recall ever seeing limit up, lock limit up, not just limit up, but lock limit up in the Russell. Meaning that there's so many buy orders. The market is saying, nah, we got to stop right here. We can't go no further. So if you woke up this morning short the Russell, you are in a lot of pain. Look at the Bitcoin Futures Composite Index down 225. I would think that Bitcoin would have held the rally. The Bitcoin futures in the overnight went all the way up to 16,005. Right now we're trading at 15,385, still pretty strong. Nat gas up a penny at $2.90. Crude oil futures, ladies and gentlemen, I have not seen a move like this either in quite some time. We're up almost $4 this morning in crude oil. Right now, we're frozen it up $3.67 a barrel, trading at $40.82 per barrel. The long bond, oh my goodness, talking about price destruction. If this was 1999, the bond futures would be down lock limit this morning. They're down 2 full points plus 830 seconds, trading at 171 and 230 seconds. Gold and silver, we need to talk. We need to talk about precious metals this morning. I thought that me and gold and silver, that we was, the three amigos, man, the three amigos. I thought we was compadres, comrades, peoples, folk, family, homies. All right? But nah, not at all. I woke up this morning and looked at the gold and the futures. Gold is now down $75.30 per ounce, trading at $1,876.30 per ounce, just decimated. Silver, not even better. Down a full $1.24. I'm sorry, make that now $1.25 per ounce, trading at $24.41 an ounce. Just carnage. So I looked because I took a long position in gold and silver in the overnight market. I took that long position. We keep it 100 here on the show. We don't just talk about good things. We talk about bad things too. I got my face totally ripped off. But not as bad as some people, because when I woke up this morning and I saw we weren't down as hard as we are now, but we were down pretty hard, I went ahead and pulled it. I said, I got to get out of this. Forget it. My stop wasn't even hit. I said, I'm out of here. I'm out. Bye. Peace. See you later. I'm out of here. All right. No more face rippage for me. I've had enough. No mercy. No moss. I banged on the canvas. I tapped out. All right. I tapped out. Your boy tapped out. Now, I will admit, I will confess that is the worst trade I have done in the entire this whole year. That is the worst trade I have done all year. I have not taken a beating like that all year. So it was bound to happen. At some point, you're going to have at least one punch in the face, at least one per year. All right. And hopefully by that time, depending on when it comes, if it comes early on, then fine, you can get it over with, and then you'll end the year great. But if it comes a little bit later, it's unexpected, but you knew it's coming, but you're like, okay, fine, it doesn't matter because I'm still up big on the year. Now, I had my offset this morning, which really, this is what saved me this morning. I was long that Dow futures and the S&P 500 futures and the Russell My Hustle futures. All right. I found myself this morning waking up on the right side of a lock limit up market, the Russell My Hustle. And those markets saved me. All right. I'm more than made up for the punch in the face in the gold and silver. So I'm good now. I'm good. And I'm sitting here waiting for the Russell to come off the lock because we know that the Russell is not done rallying, especially now that the Dow is. Oh, there we go, ladies and gentlemen. It has now happened. For the first time in U.S. history, the Dow futures touched 30,000. Let's give it up for the Dow. 30,000 Dow this morning. 30,000 Dow, 30,000. Did I not prophesy Dow 30,000 to you guys years ago? As a matter of fact, the first time that you heard Dow 30,000 come out of these lips was when I was on with the great the Gorilla Economist show. Both of us called Dow 30,000 long before Dow was even near 30,000. You guys remember that? Me and V called it. We told you Dow 30,000, here we come. People laughed, said we was crazy, said we was drunk live on the air. And now they're not laughing anymore. Not when you have a Dow 30,000 staring you in the face. We just touched it this morning live on the December Dow futures contract. The high is Dow 30,000 exactly. So where do we go from here? Well, after I finished licking my wounds this morning, been punched in the face from gold and silver, I feel sorry for those that are still long gold and silver futures this morning. If you are a glutton for punishment. But this is a great teachable moment because I don't care how good you are. I don't care how much experience you have. You will take a loss in this market. You will have a losing trade. You just can't have all winning trades. I don't care how good you are. I don't care how good your methodology, your system, your algorithms, whatever you want to call it. The market is going to say, sorry, today is a donation day for you. Thank you for your donation. It's a cost of doing business. And you willfully accept those risks because the payoff is just as equally as devastating in your favor. So today was a good day. Gold and silver was horrendous, horrific. I am so sorry for those that took that trade last night with me. You should be out of it now, though. You should not still be in gold and silver. When you wake up in the morning, here's another thing for you. You got to remember this, folks. When you wake up in the morning and you see parabolic profits, you need to take those parabolic profits. Likewise, if you wake up in the morning and you see parabolic losses, you need to get out of the way. All right. You need to know when to call it quits. Doesn't matter if your stop got hit or not. Get out of there. Get out of there. Why wait for the stop to get hit? You know it's coming. The market's coming. You wake up, you see gold down almost $100. Why are you long? Don't suffer. All right. Don't let gold and silver do it to you. Gold and silver can be absolutely unforgiving markets. And if you're wrong, look, you're going to be wrong. The market tells you when you're wrong. And when you're wrong, you say, okay, fine, I'll get out. That's another rule. You got to cut your losses. I woke up this morning, I saw tremendous profits, but I also saw tremendous losses. I had to cut those losers. Let's cut the losers and let the winners run a little bit. You gotta let your winners run wild. You just gotta. You can't just sit there like a deer in the headlights and get run over. That's not how we move. That's not how I taught you to move. That's not how I taught you to operate in these markets. So here's what's going to happen. Depending on where we close today, the close today is going to be extremely telling because now that the election is pretty much a done deal, it's over. Biden is the next president. The markets are celebrating the euphoria, not that they like him winning, but the fact that the uncertainty part is over. He locked up the electoral votes. There's nothing else to discuss. Now, we can debate, and there will be debate. The debate about the election is not over. It's long from over. And there are some valid points in the Trump camp. There are some valid points, okay? But here's where Trump is going to lose regardless. Now, I didn't even see this coming. I'm admitting I did not see this coming. I knew about the whole paper ballot fraud thing. I knew that was in full force. And what I gathered was that Trump would win the general election, right? But then they would come back and say, nah, we got more votes. Here's these paper ballots coming in and steal it from them. What I did not anticipate, and I don't think you guys did either, I did not anticipate that they had already did backroom deals before the vote and already secured and locked up the electoral votes for Biden. I didn't see that coming. I did not see that coming. Now, this is the messed up process about this, and Trump won't be able to prove it. I mean, it's obvious, it's glaring, it's in your face. But how do you get all these electoral votes from states that you didn't win in? And that's the real question that needs to be answered. If I won XYZ state, why did the electoral votes go to my opponent? Technically speaking, whatever state you win, you're supposed to get those electoral votes to go with it. But what we're seeing is that there's a possibility of some impropriety going on here, some kind of scandal. But it's going to be hard to prove, though. That's the messed up part. I mean, you have the evidence, obviously, if this state voted for Trump, but the electoral votes went to Biden, there's something wrong there. That's supposed to be wrong there. So this is going to go on for some time. And, you know, they're going to be legal. There's a lot of legal going on. But here's what I don't think Trump realized. I don't think Trump realized the depth and the scope of the conspiracy against him. I'm not pro-Trump. I'm not Democrat nor Republican. The issue, though, is that did we have corruption? And the answer is yes. There's already been a plethora of video and all types of stuff to come out and whistleblowers exposing these schemes. So we know that there was fraud in them up in here. The sad part is that you won't be able to prove it. And that's the messed up part. Now, the Electoral College will have some explaining to do. But beyond that, it is what it is. Trump knew that they were going to do whatever it took to get him out of office. It didn't matter if they were going to, you know, be involved in all these conspiracies. They didn't care about that because they control the mainstream media. So they control the narrative. So it is what it is. They stole the election from Trump, and now the people have gotten what they wished for. The people wanted this new world order, and now they've gotten it. So when the honeymoon is over, that's when all the stuff is going to break out. That's when the next shoe is going to drop. So here's how this is going to go. And, you know, they've already spilled the beans. They've allowed the talking heads on the mainstream media to touch on the subject. But then they just touch on it and then they keep moving. So they've already planted that seed of propaganda in your mind so that when you see this next move, you won't question it. As a matter of fact, you'll welcome it. What's the next move? The next move is within the next 6 months. I'm expecting even sooner than that. Before So somewhere around the inauguration, I think during the inauguration, and I think that's when the clock will start ticking. I'm thinking within the first 100 days of office, Biden's going to step down and let Kamala become president. That's exactly what's going to happen. I feel it in my bones. Biden will not finish out this first term. Sorry. He's going to bow down. He was used as the vehicle to get Kamala in the office, to have the first woman president. And more than likely, Kamala will make Hillary Clinton her vice president, her VP, or she'll put her somewhere in her cabinet. I think her cabinet is going to be pretty much all women, or the majority of all women. And this is going to be the clock ticking on the American empire. So that is my take on this. And not only because of that, but because of all of these asset bubbles in these markets. Did you know, according to the Financial Times, senior Federal Reserve officials are calling for tougher financial regulation to prevent the U.S. central bank's low interest rate policies from giving rise to excessive risk-taking and asset bubbles in the markets? Eric Rosengren, president of the Federal Reserve Bank of Boston, told the Financial Times that the Fed lacks sufficient tools to stop firms and households from taking on excessive leverage and called for a rethink on financial stability issues in the U.S. What in the heck are they talking about? If you want to follow a monetary policy that applies low interest rates for a long time, you want robust financial supervisory authority in order to be able to restrict the amount of excessive risk-taking occurring at the same time, he said. Otherwise, you're much more likely to get into a situation where the interest rates can be low for long, but be counterproductive. They're calling for more power, ladies and gentlemen. The election is barely over, and already the moving pieces around the chessboard are moving, and they're not wasting time in seizing more power. All right. According to the Financial Times, one of the fears among some Fed officials is that the U.S. central bank could be forced to raise interest rates earlier than it would like if financial sector risks are not kept under control and dangerous asset bubbles emerge. So now they're already getting you used to it, that they're getting ready to raise rates on you. All right. Now, Lael Brainard, a Fed governor, said in a speech last month that expectations of extended low interest rates were conducive to increasing risk appetite, reach for yield behavior, and incentives for leverage, thereby boosting imbalances in the U.S. financial system. She said it was vital to use macroprudential tools, meaning rules designed to curb risk, as well as standard prudential tools as the first line of defense in order to allow monetary policy to remain focused on achieving maximum employment and 2% average inflation. How do they intend to curb such quote unquote risk appetite? Well, let's take a look at monetary bubbles in the Fed. While acknowledging that the low interest rate policy can encourage asset price bubbles, Federal Reserve Bank officials are nonetheless of the view that to prevent asset bubbles from becoming a threat to the economy, there is the need to impose tougher regulations on who? Consumers. And who else? Businesses. And the Fed's policymakers' way of thinking, it is the businesses and consumers who are responsible for the harmful effects of bubbles. They're blaming you for the bubbles. That didn't take long. They're blaming you for the bubbles. They're saying it's your fault for the bubbles. By the way, that's the opening bell, and the Russell My Hustle is now off of lock, and it is exploding. The market is jumping and skipping and having trouble keeping up with the price. 18, 15, 30 and counting. We are now in the Russell My Hustle. It's official. You can also call this a fast market. Prices are jumping and skipping all across the board. This is a phenomenal situation we are witnessing here today, ladies and gentlemen. Big old spike on the 1 hour and the 4 hour chart as the market is now preparing itself to take out. Looks like we're going to take out 1825. Looks like 1850 is now in play, ladies and gentlemen, on the Russell My Hustle. Looking like 1850, between 1825 and 1850. That's where the new range will be. Should be able to get there before the close today. And we'll see what it can lock in at that point. But that's what I'm seeing right now. Seeing a key support at 1750. Let's see if the 1750 key support can hold. I believe that it should, but we'll see. Very fast market here in the Russell. We just came off of 1815.30 spike high. Now we're at 1765.6. So strong pullback here. But I do think right now the initial target that we're looking for intraday today now is between 1825 and 1850. Now, because we opened up near the highs of the session on the other stock indexes, the market is now having a little pullback this morning. Huge gap up, though, on your equities, but now just a little pullback to build an open high support, that opening range support. So the market's trying to build that range from the open high. And then from there, the market will make its decision what it wants to do, what it wants to be when it grows up. But for right now, that's where we are. Yeah, that's where we are right now. Just going to try to find a low point for this open, trying to find that low print. And right now, that low print, it's around where it is right now. We're around that 1760 to 1750 range. 1750 should be key support. We'll see if I'm right here on this opening range. Like I said earlier, for those that are just tuning in, I believe that I really thought that Bitcoin would be a little stronger here. But because the precious metals are just absolutely getting destroyed, Bitcoin seems to be holding its own, though. It's like Bitcoin is moving with the precious metals, which is south, but it's holding. It's not plummeting. It's holding its range. It's only down to 185. So we're holding that 15,000 level. As long as Bitcoin can escape and survive the day above 15,000, I think it bodes well for another run at the overnight 16,000 high. So I'm still my outlook is still bullish to Bitcoin, and of course it's extremely bearish on the precious metals. Precious metals are just straight up looking whack here, but your Bitcoin is good. Your Bitcoin, you have the market bias with you this morning, which is bullish. You have everything going for you this morning in the Bitcoin. If you subscribe to the Pulse Waves, you woke up very happy this morning, extremely happy this morning, because the system is holding that long position there. So that's looking good on the Bitcoin. And like I said, the market right now, within this first hour of trading, is trying to find an open range support. And then once the market has found that open range support, then we should be back off to the races, and we should take out the overnight highs in the stock indexes. That's how it's looking right now. So we'll give the market a few moments to kind of find itself and try to decide what it wants to do. So I'm watching it. All right, I'm watching it very intently. So I'll keep you abreast if anything changes on mine. If I see anything, I'll definitely let y'all know. All right, so this is the part that should really, concern listeners this morning, is that the Fed is saying that it needs to prevent you from hurting yourself. Basically, they know best, and they're saying it's not good for you to take on what they call or deem excessive risk. So now they want to put some type of additional policy measures in place. And I don't know what that means. Does that mean, are they going to tighten lending? I can understand if they tighten lending, I can get that. But as far as markets, I don't like the idea of having the Fed involved in the markets on that level. They should not be. That's problematic to me. All right, it's already enough that they've already taken certain liberties as it is. We don't need any more of that. Okay, we just don't need it. All right. So it is what it is. So how are they thinking about doing this? Well, at the World Economic Forum in Davos, Switzerland on January the 27th of 2010, Nobel laureate in economics Robert Shiller argued that bubbles could be diagnosed using the same methodology that psychologists use to diagnose mental illness. So in other words, what they're trying to say now is bubbles are caused by people who are suffering mental illness. See how they say things without saying it? Now, Shiller is of the view that a bubble is a form of psychological malfunction. Hence, the solution could be to prepare a checklist similar to what psychologists do to determine if someone is suffering from, say, depression. The key identifying points of a typical bubble, according to Shiller, are 1, sharp increase in the price of an asset. Number 2, great public excitement about these price increases. Number 3, an accompanying media frenzy. Number 4, stories of people earning a lot of money causing envy among people who aren't. Number 5, growing interest in the asset class among the general public. Number 6, new era theories to justify unprecedented price increases. And number 7, a decline in lending standards. So it is going back to that lending. Notice how they ended off with the lending aspect. All right. Now, there's something that I said to you guys a while back, for those that have been listening for a while. Do you recall what I said and why I've always been an advocate and pushed so heavy for you guys to get involved in the markets while you still can? Because I said there may come a day, a time, a place where they will no longer allow the little guy, the little people, to participate in their sandbox. They don't want Joe Plumber getting rich off of trading equities on Robinhood. They don't want Joe Plumber getting rich trading micro forex using the ONA platform. They don't want to see Joe the Plumber getting rich trading micro stock index futures or micro FX futures. They don't want that. They don't want it. They want to kick you out. They're saying you're getting too rich. You're getting too big for your britches. You're getting too uppity. And we need to do something about it. So now they want to diagnose and label you basically schizophrenic and mentally impaired so that they can prevent you from participation. Now, what Shiller outlines here are various factors that he holds or observed during the formation of bubbles. Now, to describe a thing is, however, not always sufficient to understand its key causes. In order to understand the causes, one needs to establish a definition of the object in question. Now, the purpose of a definition is to present the essence, the distinguishing characteristics of the object we are trying to identify. A definition is meant to tell us what the fundamentals or the origins of a particular entity are. Now, the 7 points outlined by Shiller tell us nothing about the origins of a typical bubble. Without an understanding of causes of an event, it is not possible to counter its emergence. another point to be made is that if you start to cool off, in effect, people from investing in certain things, then you're going to limit and, for the most part, destroy innovation. Can you imagine if the Fed basically made it illegal for anyone to buy tech stocks during the 1990s? Would the internet even be where it is today? Will we even really have an internet today? You don't want the Fed getting involved in those things. Speculation is a part and a function of price discovery. It is an ignorant thing. This tells you that these individuals, they are not financial people. They are not truly market participants. They're not entrepreneurs. They've never employed no one. They've never put money in people's pockets. They've never helped a man to learn to fish. They've never done that. So they don't know what it's like. All they do is sit in an ivory tower somewhere and come up with these concocted, ridiculous notions that have never stood the test of time, most of which have never been tested. And then when they fail utterly and destroy lives and destroy economies, they don't have to take responsibility. They never take responsibility. The think tank people never take responsibility when they are wrong. They're never held to any type of a standard for being wrong. They come out with these models like mask wearing. They control the narrative on COVID. They use these flawed models about social distancing, never been tested in real life, ever. And then they come up and say, hey, now we really have an answer. Let's lock down something that has never happened in human history. And then when you blow up the global economy, oh, well, these things happen. And they take no responsibility. They're not held responsible or accountable. There's no accountability on their part. According to them, according to popular thinking on this, as far as they're concerned, an asset bubble is about a large above historical average increase in asset prices. Now, if an asset price is the amount of money paid for the asset, it follows that for a given amount of a given asset, an increase in the price can only come about as a result of an increase in the flow of money to this asset, all other things being equal. Now, the greater the expanse of money is, the higher the increase in the price of an asset is going to be. That's just basic math. Okay? So why are they struggling with these basic concepts? It's amazing that Fed officials are warning against the conduct of households and businesses with respect to the low interest rate policies of the U.S. Central Bank. It did not occur to them that the key cause of bubbles are the U.S. Central Bank's loose monetary policies and not consumers and businesses' responses to those policies. They always want to shift the blame to you. They never take responsibility. It never occurred to them that it's their fault because of their loose monetary policy. Oh, no, it can't possibly be that. Can't possibly be that. It's ridiculous. It's utterly it's insane. And these are the people you got teaching at your universities and pumping you full of lies and deceit. You got the insane individuals controlling the insane asylum. So this is where we are. This is how this pans out. This is what it looks like. And it's crazy to me. I don't understand how they don't get this, ladies and gentlemen. But they don't. They don't get it. They don't get it. What do you do? What do you do? There's not a lot you can do. Not a lot. Not a lot. But there's a lot going on this week, though. Today, we got Japan preliminary September leading index, September current account balance, and Germany September trade balance. We also got the central banks, ECB's Ren and Merch, Fed Mester speak. We got earnings, which is McDonald's. Tomorrow, we got China October CPI and PPI. We got the UK September employment, unemployment, France September industrial production, Italy September industrial production, Germany November ZEW survey, the US October NFIB small business optimism index, September JOLTS job openings, Japan's October M2 and M3 money stock. We got the central banks, ECB, not Feds, Quarles, and Rosengren and Kaplan speak. And then we got earnings. We got Adidas and Deutsche Post. Then for Wednesday, we got the Japan October preliminary machine tools orders, October PPI, September core machine orders in the UK, and US weekly MBA mortgage applications. And we got the ECB President Lagarde speaking. Also on Wednesday, we got Air Products and Continental earnings coming in. Thursday, we got Japan September tertiary industry index, Germany final October CPI, UK preliminary Q3 and GDP, Euro area September industrial production, US October CPI, weekly initial jobless claims, October monthly budget statement, ECB publishes economic bulletin, ECB President Lagarde, Fed Chair Powell, Feds Evan and BOE Governor Bailey speak, Bank of Mexico monetary policy decision. And as far as earnings, we got a whopper. We got Walt Disney reporting on Thursday, Cisco Systems, Siemens, Deutsche Telekom, Merck, Applied Materials, Tencent, and Nissan Motor. Then to wrap it all up on Friday, we got France final October CPI, Euro area preliminary Q3 GDP. We got the US October PPI, preliminary November University of Michigan Consumer Sentiment Index. And the ECB's Ren, Weidman, and the Fed's Bullard are speaking. So, finally looking at just the U.S., the key economic data releases this week are the CPI and jobless claims reports on Thursday. And, of course, all the numerous speaking engagements. So, yeah, it's a lot going on, ladies and gentlemen. A lot to be kept abreast of. So you're definitely going to want to keep your head on a swivel as those things come out. Next, we got to deal with, like I said at the beginning of the broadcast, we got some things we're going to have to deal with. You know, it is what it is. Number one, yes, you are right. You're right, Dave. Welcome to United States Sweatshop of America, because eventually that is what we're going to do. We're going to surpass China as the world sweatshop. So get ready for that. This is what you say you wanted. This is who you voted into office. So this is exactly what you're going to get. The people get the leadership they deserve, ladies and gentlemen. Deal with it. Deal with it. The election is not over, though. And I think the media knows what's going on behind this as well. So think about a few things. All right. There's some things that are going on around here. Okay. This is interesting. All right. This is some weirdness. Okay. We know the mainstream media controls the narrative. All right. And we know that a 78-year-old early dementia former VP who could not draw a crowd larger than a dozen just beat Trump in a quote-unquote fair election. Now process that just for a minute. Somebody with Alzheimer's just beat Trump. Start with Pennsylvania. All right. Now we know that Biden did his thing, right? He did his thing. He got the votes that he needed to get, right? No problem. He got 290 electoral votes, right? But Pennsylvania is only 20 of those electoral votes. According to the Justice Alito opinion, it is pretty clear that he wants the after election night at 8 p.m. vote separated for a reason. Biden is going to lose at the Supreme Court, and they know it. 4 justices already said the Pennsylvania Supreme Court cannot adjust voting rules. Now, a new arrival, Justice Barrett, says she is there to apply the rules in the Constitution. So, what do you think is going to come out of that one? Right. Now, remove the after 8 p.m. ballots and Biden loses Pennsylvania. Biden sets at 270 votes at that point. Now, let's visit Nevada. Okay. There are not a couple of people who are taking a look at this, but there are tens of thousands. Everyone knows it. All right. So if you look at Harry Reid, he knows what's going on too. And he apparently has them voting in droves in this election. Probably not a good thing for Trump. But within 72 hours of the election, the Trump team found that, and they validated over 3,500 votes. All right. I don't think that Trump's people stopped counting, even though everyone else did. Now, every one of these is a ballot reduction for Biden. Nevada, as of now, is well within reach. And if you think about it, when the California crowd is reduced, and a few of them may testify since a false vote is a very bad thing, with jail time if convicted, maybe that is a bigger story in all of this. So now, if he loses Nevada, then he loses the election. But there's more to it. How about Wisconsin? Right now, it's 20,000 votes in Joe's direction. Lots of stories out there, well below the Google algorithm. And there are more Wisconsin votes than there are registered voters. How is that possible? How is that? Dead people can't vote, right? And what about the Wisconsin election clerks, what they were told and the directions that they had to follow to modify mail-in ballots and fill in the blanks where witnesses left out critical information? There were thousands of such prima facie wrongful votes, but nevertheless, Biden up 20,000 votes. Now, that number is still in question. No more truckloads of votes coming in. So every ballot that Donald Trump's team eliminates gets President-elect Biden one step closer to former VP Biden, who lives in a basement. All right? What about North Carolina? What about North Kakalaki? Well, what about North Kakalaki? The one pretty much looks like as though it is over and Trump won it. Fox News is rumored to call it for Trump around April of 2021. Remember where we are here. Biden is probably going to lose Pennsylvania. So if he loses even one state, even one electoral college vote, boom. Either Trump wins outright or it goes to the House, which means Donald Trump has 4 more years. Right? That's what the thinking would be. What about Michigan? The land of the glitches in the voting machines. 6,000 votes for Trump given to Biden in one of 47 counties where that software is used. About 150,000 votes in Biden's favor. Google the 130,000 Biden votes that showed up in the middle of the night, and you can see how the wonderful people at Google are fact-checking this debunked story. In fact, for fun, Google Michigan voter fraud, and you get literally 3 pages of this was fact-checked and proven to be false. Why would Google be so assiduous? They too see that if Amy votes with the 4, Biden is 1 vote away from the basement. Lawsuits in Michigan and other states are being launched, and discovery will take place. Google will not be there for that. Voter fraud is kind of like larceny. A little is okay. It is even kind of entertaining. Dead people have been voting for 100 years in democratic cities. It is such a constant that one would think the Republican Party would consider a dead voter outreach program to get their share of these dead votes. But voter fraud on a scale like this is just not sustainable. It does not pass the common sense test. We have bloggers with lots of time on their hands going through voter rolls and showing that person after person who voted in a swing state also fought in the Civil War or maybe the War of 1812. It was funny at first, but the overwhelming number now goes beyond humor and it rubs the American people's face in it, does it not? I think Donald Trump has to swing at least one state, actually one electoral vote. Not only is this thing not over, but the Biden team must be sweating bullets. Voter fraud at scale seemed like a really cool idea until Trump went to the mattresses. Now that he is fighting it out one voter at a time with the Supreme Court likely to create the starting point at Biden 270, Biden has everything to lose. So this is a battle. It really is. It really is. We'll see where we go from here with this, but the election may be over, but the election itself, as far as the process, it's not over. It's not over. But what about all of the censorship? I mean, let's keep it 100. Oligarchs and social media giants are now claiming a monopoly on the truth, and that should worry every American citizen. You don't want to lose the right to truth. The media have called the election for Biden numerous times throughout the process, and no one could do anything about it. They control the narrative. They've already deemed anything other than the mainstream media is already considered fake news by the American people. They were told to believe this, and they do. Do you want to live in a land where the mainstream media has a corner on the truth? Who made the decision to censor the elected president of the United States? Who granted them this power? Whose interests do they serve? To whom are they accountable? In the future, who gets to decide the truth or what the truth is? Who gets to decide there is no debate on the subject? The truth is what we tell you it is. American people better wake up. You better wake up because time is running out. You live in a democratic facade, ladies and gentlemen. And you need to be mindful of it because you do. You were convinced even before the election that the American people had made its choice already. The election was just an act of formality. The battle was basically won already. But then just a few hours later, it became clear that the pollsters failed them completely once again. Again, no one is held accountable. There's no accountability. Pollsters got it wrong. The Trumpsters refused to evaporate. They grew substantially and even expanded demographically into some unexpected electoral territories traditionally associated with democratic politics. The clear meaning of the election is that America, like most other Western states, is divided in the middle into two opposing societies that have very little in common. Far more worrying is the clear fact that the two sides of the divide cannot tolerate each other. As much as the left, progressives, and liberals are convinced by the absolute validity of their way of thinking to the point that they insist to dictate their point of view by authoritarian and tyrannical measures, at least as many people do not buy the truth that they are putting in the Kool-Aid or follow them, and most people reject those values. Many Americans do not accept the identitarian shift. Many Americans are not convinced at all that gender is even binary. the question is, what happened, what is happening, and what is about to happen? The Democratic Party offers Black people, gay people, Latino people, and so-called diverse minorities to be marginalized forever in an amalgam of others united. The GOP is offering those people an immediate integration as ordinary people into the American realm. All you need to do is get yourself a red Trump baseball cap and join your next local Trump rally. It is the most basic existential togetherness that was so vivid within the left revolutionary discourse, but only materialized into a populist, sustained tsunami of political resistance within the context of right-wing populist politics. Again, when we want your opinion, we'll give it to you. And the American people say, yes, master. They don't even understand that their movements have been given to them by the left, by those that seek to control you. They give you the causes they want you to believe in. No questions asked. So I'm just doing the countdown now myself. I'm counting down. Counting down because you guys have gotten exactly what you say you wanted. The people get the leadership they deserve. All right, prepare. Prepare. You need to prepare. Where do we go from here? I think you guys know, but you don't want to deal with it. All right. So just think about a few things. If you haven't already, gone to PulseWaveTrading.com and register so that you can learn how to navigate these muddy waters. Then you need to stop lollygagging and get on over here while you still can. You got to do it. All right? Because at the end of the day, I don't care what they tell you. Market bubbles have nothing to do with valuations or fundamentals. It doesn't. And they don't want you to play in their sandbox. All right? They know the market has been detached from the economy for a long time. They know that. So come on over here and exercise your amendment rights before they're taken away from you, and then you won't be able to play at all. All right, so keep your head up, man. Y'all know what it is. You know what we do over here, man. PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.